Good morning, everybody. It is Friday, April 26th. And did you watch the NFL draft last night? Because if you did, and you paid attention to free agency, you realize how Packers are going to get much, much better. The Packers are going to get much, much better next year. So if you're on our schedule, you better be afraid. All right, that's all I got. That's all the Packer rah-rah I got. The draft was kind of fun last night, so don't usually watch it, but I haven't watched in a few years because the Packers never have anybody to draft because they're drafting late. But we did, or they did the fans a courtesy last year and sucked, so we got a higher draft choice, and then we traded up, which we never do. So it looked interesting. A couple of fast guys that were a little bit of reach on both of them, but maybe it works out. All right, so the fundamental trends is completely up and functional now, and the rare chat we are starting to use. So if you are a fundamental trends member, then you should be checking out the rare chat. I'd say 90% of the people who are signed up have access to this. Some newer folks are just doing 401k or the Intelligent Investor Service, which is basically just like margin of safety investing. At the end of the video, if I can figure it out technologically, I will put a closing end cap with the discounts that are available for fundamental trends. So if you are looking to do any swing trading, this is the service of mine that you want to use, because we'll use the chat rooms to do stock, sector ETF, global ETF, hedging trades, and then, for me to talk smack about your sports teams over here in Mumbo Jumbo. But to talk about Kinder Morgan this morning with somebody. They wanted to know if they should still get into the calls. You could. The calls that I recommended did not pop like I thought they would. They're even right now. I think the story with Kinder Morgan is pretty simple. They are lowering their debt. Their revenues are increasing, both by small amounts. Revenues up a little, debt down a little. Shareholder yield is doing great as the company buys back shares. Just increased their dividend to 5%. And again, like I said, the debt is slowly falling. And the wild card there is that they have a couple of assets that they can sell to, throw back into the shareholder yield mix and decide whether or not they want to pay down debt, pay out more of a dividend. My guess is that they sell part of their CO2 operations, because they don't really need to do drilling themselves, but they like their pipes. They are the biggest transporter of CO2 in the country by far. They have a pipeline in Canada that delivers jet fuel. I think I could see them selling that. They might sell some terminals. Kinder Morgan is in very good strategic position. Next week, I'll be talking to Seeking Alpha in an interview about that. Because the guys at Seeking Alpha who talked about it in one of their webcasts, they had no idea what they were looking at. They just kept looking at 2015 and 16 and somehow extrapolating that out to 2019 and 2020 when there is no crash going on in oil and gas right now. There's volatility for sure, but Kinder Morgan has tightened up their financial profile a lot, and they are not growing just for the sake of growth anymore. They're only paying attention to very economic projects like the ones in the Permian. They actually bowed out of a deal, a natural gas pipeline deal recently. So rather than building a new natural gas pipeline and expending the money, they're reversing the flow on a different pipeline. So their stewardship there has been very good since kind of taking it in the teeth when the whole energy paradigm started to shift a few years ago. So energy is what we're going to talk about today. We are going to talk about the Permian stocks that could get bought out here in the next couple of years, and I think some of them will be imminent. Some of these stocks are already up a little bit as investors position themselves. So here are the top Permian oil producers. Occidental I talked about, and they're more an acquirer than likely to be acquired. And everybody else on this list is probably likely to get acquired, with the possible exception of EOG, which might do some buying themselves. They might buy somebody. So we'll see. But I do have some nice things laid out here. Oil prices and oil stocks pulled back again today, mainly because of Exxon, right? Exxon missed profits. But what have I been telling you about Exxon for 2 years now? Exxon is not a great oil and gas play. They're just not. Their balance sheet is not as strong as people think it is. Their cash flows are weak. They have assets all over the world that are never going to get monetized. So they have another wave of write-downs coming. Whether that'll be in a year or 2 years or 3 years, I don't know. But at some point, Exxon writes down a whole bunch of assets. If Exxon is proactive and gets ahead of things, they will start splitting that company up sooner than later. And they will spin out their midstream assets. They will spin off their upstream assets. They will spin off their downstream assets. Maybe go out and buy First Solar. We talked about that today at Margin of Safety and Fundamental Trends. I disguised the title a little bit here, but this is about First Solar. I think Exxon might buy them. That's been a rumor for a while. In any case, oil stocks are down right now, just a little bit off their highs. This is a retrenchment. If you don't have oil stock exposure, particularly some of the companies that are going to get bought out, then I think that you should start thinking about doing that. So Wall Street thinks Chevron will beat Occidental in the fight for Anadarko Petroleum. I agree with them. Chevron CEO may have already talked today, but if not, I believe that the offer from Chevron is going to be raised a little bit. It won't probably match Occidental, but I think it's pretty likely that Chevron comes up with a little bit more cash to sweeten the deal. And I don't know if they'll come up with any more shares. I think they'll probably just come up with some more cash, maybe some more shares. But I don't think they match the $76 bid from Occidental, and they don't have to because there is a $1 billion breakup fee. So to match the Occidental bid, Chevron has to come up to about 75. But the reality is that they don't need to match the bid because it's probably a little safer of a merger in the eyes of the Anadarko folks. So if they come up to 71, 72, I think it's probably all they need to do. And plus the board of directors, the day before they agreed on this merger, they voted to give themselves bigger bonuses if there was a merger. Pretty interesting, huh? I bet they never saw that one coming, huh? Yeah, they had Occidental and Chevron bidding on them, so they voted to give themselves bigger bonuses if there was a change in ownership. Wow. You can't get more shady than that, folks. You just can't get more shady than that. All right, so Occidental Petroleum's down a little bit. You know, it got all the way up into the 80s before the fall. And now is in this nice trending range here. I would imagine that it's going to start trending up here going into the summer. And I think then that will be our opportunity to make some strategic decisions about what we want to own longer term and what we don't want to own longer term. I think Occidental, because of the dividend, and because I think they are going to effectively use their shares to buy other companies, I don't think they're. Anadarko was a special deal. Anadarko, if you take a look at the map here, fit in perfectly with Occidental. So here's Anadarko, a bunch of properties over here. It's hard to see on the map, so I understand that it's difficult. I have to sit here and squint over and over, but I'll show you some other charts as we go through. But the pink is the one that I wanted to really pay attention to. Chevron is really expanding its footprint, right? So they're going to throw on a bunch of Anadarko holdings in here over in the Delaware Basin, which is the western side of the Permian. But take a look at some of the other colors that are out here. You got Devon Energy, which probably is for sale. ConocoPhillips is in here, and they have assets all over the country. They could be an interesting company when it comes to Devon. I think Conoco and Devon would make a pretty good match. Concho Resources is all over the Permian after their purchase of RSP. See them in here, and then over here as well. So Exxon or Chevron would be a good suitor for Concho. And then there's some smaller things. So we'll go through those now. But Occidental, if you take a look at the chart they put out on the potential merger, so Occidental is all these grayish blue splotches, right? They're all over the place. Then Anadarko is going to really go into the heart of their play in the Delaware. So Chevron's going to get that instead. I think that's probably 90% certain. And that would make Chevron the biggest net producer rather than Occidental. So what is Occidental going to do? Well, you have Concho. They would fit in pretty good. And then you have a couple other companies, and we'll go over that in a second. Who might Occidental buy instead? Right? I think that's a pretty interesting question. Clearly, they want to be on the Delaware side, but they have Midland presence too. They could engage in land swaps. They've done that in the past, so we'll see. But if you take a look at their chart, and I look at the weekly because the dailies, that just gives you a little opportunity to buy the dips with the daily charts. Take a look at the weekly charts. Money flow started rising. This is kind of your smart money. And now it's come down because people expect them to go out and acquire somebody. And, they know that there will be a little bit of short-term pain involved with that. Devon Energy has been going up since the rebound after Christmas. And it's just starting to turn over a little bit. We'll see if that continues. It doesn't look like it's overbought though, right? So this could just be one of those little dips. If you take a look at the daily chart here, you'll see that, it's dropped down to here. But I think the weekly shows you, right? You just have the ups and the downs, but the weekly chart shows you what the real trend is. So I think that Devon Energy probably gets acquired. Let's take a look at their acreage, right? They are primarily Delaware Basin. They have a little bit over here too in the Midland, but they would be a very good target for Occidental Petroleum as well, and much, much cheaper. So you take a look at Devon, and they have assets in some other places in the world. They have some Stack Scoop in Oklahoma. They have some Eagle Ford. They have some Powder River Basin. So Occidental, which is an international company and has assets throughout the country, probably is a good suitor for Devon Energy. And in fact, if I had to make a bet as to which company Occidental bought, I think Devon Energy is probably my top pick. They are very digestible at $13 billion versus Anadarko being much bigger. They have the type of Delaware assets that Occidental wants. Another suitor for Devon clearly could be Exxon. Royal Dutch Shell, if they decide to get more acquisitive. They've talked about it, then they've backed off, so we'll see. Total doesn't seem excited, but BP and Eni both have talked about some shale. So we'll see. There's a limited number of suitors, but that's for buyouts. There are some pretty good merger possibilities as well. So who could get acquired in a merger, or who could merge into somebody else? Well, again, story on Pioneer, pretty good, right? You get volatility on the daily charts. You can see that the longer term trend, the weekly chart, is showing you that there's people acquiring Pioneer shares. So you're getting this little pullback. I'm not a Fibonacci guy unless I sit down and really think about it, but this is probably some type of technical pullback back here to support. And what about their plays? They are in the Midland Basin. So if we take a look at who might be interested in that, Concho could probably take Pioneer as a green, right? Look at green. A lot of Pioneer in here. And look at that, right next to Concho. Right next to Concho. I could see Pioneer and Concho merging. I think, see, there's a little bit of Pioneer up here, but mainly they're in here. That would be a pretty nifty merger. RSP Permian, which is what Concho bought. That's how they got the Midland assets. It would make sense for them to bolt these Pioneer assets right on there. It would be the perfect merger for them to add Midland assets if they want them. So they'd have to do some sort of acquisition. So how would that play out? Well, Pioneer is $27 billion. And Concho is $23 billion. So you'd really be looking at a merger of equals. What would that do for the share price? Well, if they deem it a merger of equals, right? If they look at it and say, look, Concho is going to get 49% ownership and Pioneer is going to get 51% ownership, and the Pioneer guys run it, maybe the Pioneer guy wants to retire. I forget his name. But now all of a sudden you have clearly the biggest Permian play out there. So I think that the most likely merger to me seems to be Pioneer and Concho. The way that their assets fit, and that's important, because when you buy something here, you're trying to find something next door to what you already own. Concho and Pioneer are right next to each other, right? Clearly, Chevron and Exxon can buy anybody because they're everywhere. But and Occidental, if they just want Midland assets, but I don't think that's really what they want. I think that they want to find somebody with a big hunk in the Delaware, and Devon Energy fits in there really good, and then they can take over their other assets and probably sell some of them. So this just makes a lot of sense to me, the Concho and Pioneer merger. Now, what that would do is give them great synergies, right? Not only do they get to scale up and get the benefits of that, but they wouldn't need nearly as many people working out there, right? They could combine their infrastructure, their pipes, right? Their gathering system would be more valuable. Their water operations would be more valuable, and Concho has a pretty good water operation, and which is something that Pioneer talked about being a little tough. So Concho and Pioneer, in my mind, they make an awful lot of sense as a merger. And let's go over to one of my favorites. We got Encana. And Again, a little pullback on the daily. Stock just has never really gained a lot of traction. It's drifted up after this just obnoxious crash. And it seems to be healing. And the smart money's piling in. Okay. Had crossover on the MACD. Not anywhere near overbought, which means it has a lot of room to run. Why would somebody want to buy them? So they have Midland assets as well, right? But then they also have these assets in Oklahoma, Stack Scoop. And then they have these natural gas assets. Honestly, I think that Encana may just end up selling all of its American assets. I think that they might end up being natural gas of Canada again, right? That's what Encana is. It's the old kind of part of the old Enron, not exactly. There was some relationship. I forget exactly what it was. But I could just see them selling their American assets and becoming basically a debt-free company that had natural gas and some oil up in Canada. They can get a lot of money for their Permian assets. And it might make sense for them to just say, hey, let's focus on one spot. Let's massively reduce our footprint. Let's just churn out tons and tons of cash flow. So I think that makes sense for Encana. Who could they really merge with? Royal Dutch Shell has talked about them. Who else in the Midlands? So we go to Encana, kind of that dark green, right? That gross green right there. They're all in this area. They could snap on to Pioneer. But does Pioneer want the whole company? No, Pioneer doesn't want the whole company, and neither does Concho. So, Encana selling their Permian assets honestly just makes a lot of sense to me. Chevron and Exxon, again, both natural suitors. So is Royal Dutch Shell, based on what they've talked about. Parsley Energy. I really like this one, guys. I think that this is something that you should own. Smart money's piling in. Delaware assets. This is one that could be bought out by Occidental, Chevron, Exxon, or they could just go it alone. And I think that they do pretty well. So again, Parsley, smart money started piling in after Christmas, and just chopping along since. Not any, kind of sniffed over, bought for a couple days. But look at these. Look at this. I mean, this level here is going to be resistance. It has a long way to go to get up here. You're looking at a 50% gain. So I think Parsley is in pretty good shape. And again, I'll repeat myself. I don't think any of these companies necessarily get back up to their all-time highs. I think they get to that level right below that. I think that this is probably going to happen. I'm not so sure about this. So we play this out. We get the next rebound, and I think we do pretty well. But Parsley's got good assets. They're very saleable. So, we'll see. Concho could buy this. Occidental. There's a lot of companies that would like these assets. Centennial Resources. They pulled back on their spending plans this year because they weren't sure about oil prices, and they just announced that they're going to, maybe go to the upper end of the range that they laid out back here when it fell off, right? Because they got the December fall off, and then when oil prices weren't rebounding, they said, hey, we're not going to drill as much. So they're sitting on a bunch of acreage. Where are they? Again, Delaware Basin. So Centennial Development, Parsley Energy, they are both great bolt-on acquisitions for Chevron, for Exxon, for Occidental, or Concho. All those companies could buy these little companies. So Centennial is only a $3 billion company. I think these guys are what, 13, 6, 7, 6 billion dollars. These guys could get eaten up, bam, like that. So I have calls on both of these companies. I have calls on Parsley Energy. I have calls on Centennial. I don't generally buy the leaps anymore just because we are spending too much money on time value. So I just roll them periodically. So I like those. And then EOG could get bought or they could buy. You know, they're another company like Accidental, where they're big enough to buy people, but they're small enough to be digested by Chevron and Exxon. These guys are the low-cost leader in oil. They produce cheaper oil somehow than anybody else. And you know, certainly they're high grading, right? They're drilling their best properties first, but they're also technologically maybe the best out there. So where is their land? They have Delaware Basin land. They could peel this off and just use the money to wipe out debt. Well, if they did that, that would leave them with Eagle Ford for condensates, a little bit of liquid, a little bit of gas, and the Powder River Basin, which is becoming very exciting, as some of us who follow Chesapeake Energy know. So, you know, because there's gas here too. And not only, you know, because there's coal, there's gas, there's oil here. This is, if you're not aware of this, if you take a look at the United States and you take a look at all the major shale plays, what you'll see is that they're all kind of down the middle of the country, starting in Canada to the Gulf of Mexico. So that used to be an inland sea, thousands, tens, and probably millions of years ago. I don't know how long ago, but that was an inland sea. So now that part of the sea is higher, and it's easier for us to get that oil. So, you know, keep that in mind. I mean, that's why there's oil there, but not in places necessarily where there's mountains. Oh, right. So they have other assets. This is the one I don't like. I don't like anything in Colorado. They made a point of putting that line there, didn't they? Right? Their assets here in the Wyoming side, which is very fossil fuel friendly, not in the Colorado side, which is getting kind of mean, you know, because they got weed now, so they don't need the oil and gas. But yeah, so you got that. EOG would be a pretty easy acquisition from bolting it on to other assets standpoint from Exxon and Chevron. Exxon and Chevron probably the only companies that would buy these guys. Could they merge with Occidental and form essentially almost another major? They could. They got the right Delaware Basin assets, which is what Occidental really wants. And then you could see them maybe selling off their Midland assets, Occidental. So there's going to be some interesting mergers and acquisitions here. I think imminently. I think between now and this time next year, you're going to see no fewer than 4 deals, and you're probably going to see 6 or 7 or 8 when you factor in the teeny tiny companies. There's some private companies that probably get bought out as well. So if you are looking to make some mergers and acquisitions money, the aggressive trades here are to buy calls a little bit out of the money, you know, 10 or 20% out of the money, and just a month or two out, right? So you're not paying for time value, and then you're going to have to roll those positions 2 or 3 or 4 times, which, you know, entails a $10, $15 trading cost, but that's cheaper than paying for the time value on a longer call to begin with. That makes sense to everybody? So these are the companies I want to look at. I have positions in Centennial, Parsley, Encana, Pioneer, Devon, Accidental, and because I think Concho is more of a merger company than a buyout company, and they don't pay a dividend, right? So Occidental pays a big fat dividend, so I want them. Concho, no dividend, and I think they're more likely to be involved in a merger with like a Pioneer. Although, potentially they could get bought as well. I'm just not sure I want another one of these. I've got so many of them. So that's where I look at it. I kind of favor Pioneer over Concho. But you could have calls on this too. If you wanted to add to the basket and put a couple dollars there, you could do that. I think that's all we got today. A nice half an hour program. Does anybody have oil questions? WTI is down a couple bucks. Yep, sure is. I am not less enthusiastic on the ECA. They are probably the most undervalued. So if you're a if you're a value investor, I think that's what you got to be looking at. Take a look at their assets. If they sell their Permian assets. I don't know if I can get the chart up again. Okay, if they just sell their Permian assets, they're going to drop billions of dollars to the bottom line. And now all of a sudden, this company, which has really good financials, right? They wipe out basically. They don't have a lot of debt, right? They wipe that debt out. I think that might be a pretty slick move. So if they sold their American assets, right? Because their stack scoop assets are very good bolt-on assets for somebody else too. If they sold then they have a little bit in the Eagle Ford, and they have, they have other assets. But what if they just sold all of their American assets? The value of their assets is way more than what they owe. So they'd become a debt-free company operating in the Montney. And they'd probably throw off a huge special dividend. I think that's how Chesapeake Energy is going to turn out. I think Chesapeake Energy eventually, hear me now, believe me later, Chesapeake Energy eventually sells everything except the Marcellus and maybe Powder River Basin, because that's going to throw off gas in the future too, right? Plus, you never know. Maybe there's a magical, mystical technology out there that makes coal clean. I think it's more likely that we outlaw coal in the next 3-4 years than there's a magical technology, but you never know. So as these companies get bought, I'll probably take profits pretty quick. I don't think there's a lot of long-term in oil in my mind. I'd rather take this money and put it into other places like 5G and cloud and machine learning. I'd rather go into spots in the economy where we have long-term secular growth at our back, and our job is to find the more exciting companies. So that's my plan. I don't expect to own anything other than Occidental 2-3 years from now. I might get surprised and have one other one, but I think that Occidental will probably be my company in that space because I don't think that they have the problems that Chevron and Exxon have to face, right? Nobody's going to sue Occidental, but they're going to sue Chevron and Exxon. And Chevron and Exxon are going to have to pay. They're going to go through the same horrible ordeal that BP went through after the oil spill in the Gulf. It'll just be for different reasons. Ultimately, if Exxon and Chevron are smart, they buy First Solar. And, if you read the article that is exclusive to subscribers of Margin of Safety and FA Trader and Fundamental Trends, right? If you're not a member, you didn't see the First Solar article, and that article will not go public. Parts of it, I'll throw out little teasers, but that article is for you guys First Solar is a great buy for a lot of reasons, including Chevron and Exxon and BP are going to have to mitigate the fury of people who want to sue them, and a lot of those people are politicians. So but they have a game that they have to play there. Other than that, I think we are good for this weekend. If you happen to be in Milwaukee for the Billy Joel concert, let me know. I will actually be at that. And next week, Pink. First time in years I've been to two big concerts. So pretty excited. And we will see. I will try to put up the discounts for fundamental trends. When I put up the video tomorrow morning, I have to figure out how to do that. There's a way to do it with YouTube. Put a end cap on. And basically all the discounts are going to be half price. And you get to keep the discount forever if you sign up in the next couple of months. I will put it back. I will put the replay on outside chance this afternoon, but probably Saturday morning. Now, for people who are fundamental trend subscribers, and you're the only ones that are going to get this stock, I have been accumulating a microcap stock that just got some incredible news. Looks like their earnings could triple or quadruple this year, and it's incredibly hard to buy the stock. So I'm only going to give it to the fundamental trends rare subscribers, but I do think it's, honestly, I think it's a stock that could go up 1,000% in the next 2 or 3 years. They have deals with Google and Shopify, and they're big into Amazon marketing. So with the new rules on privacy and people who are marketing, trying to market across different platforms, Google, Amazon, Facebook, Shopify, there's really only one company that's got a way to do it, and they are picking up clients left and right. So we'll see. Yep, I'm teasing. I don't do that very often, do I? So I gave you enough information to figure out who it is. You can literally only buy the stock a few hundred shares at a time. That is how tight this stock is. You cannot get the shares. So there's only about 8 million shares outstanding. I'm not going to send out a teaser newsletter because I don't want to play that pump and dump game. I think that these guys could be huge. And I think that they could get bought. So, which is, a theme with me. I like companies that could get bought or benefit from strategic acquisitions or mergers, whatever. Mergers and acquisitions are usually good, right? They're usually good. So you just got to figure out where they might happen, which, I know everybody screams, I want data, I want data, I want data. First of all, most people don't understand the data. That's number one. Math is hard. And if you're not a forensic accountant, you can scream data, 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 give me data, because that's the in vogue thing to do right now. But if you don't understand the freaking business, the data doesn't mean anything to you. They're just numbers, and you're guessing what they are. So understand the businesses, and then you have a shot at understanding what the data means. And that is one of the things I pointed out in the first solar article, is there's data out there that tells you what to watch for. But if you don't understand the business, not going to help you. All right. I don't think I'm going to get anything new to the websites just yet. I would tell you to read about the companies in your portfolio because, what was it, 2 weeks ago I told you to sell Intel. It's down, what, $5 today? So, you got to understand where those risks come in. And I think that Intel is probably heading down into the 40s. And then, when their dividend is closer to 4%, I'll probably want to buy them again. But in general, yeah, give me a week, and we have even more content up. There's I actually was telling my girlfriend, I started like literally 20 different pieces this week. It's just, I got to go through them one at a time and finish them. All right, have a great weekend. Enjoy the weather if you're getting good weather. Maybe start planting something. Take care.